Hey everyone, this is Jeevakan. In today's video, we'll discuss about a trade which I took in LTI, in which I implemented selling of options as well as buying of options. So we'll discuss about the dynamics of the trade. So as we discussed in our previous videos, I've invested in LTI in this important support zone. So where I invested exactly was over here, which I explained in my previous videos. So I invested over here above this red candle around 4,500 levels. So I don't want to miss the rally in LTI because the next target for LTI would easily be 6,400. So what I did was, when we had this small dip on 10th of August, I used these opportunities to sell some put options. So when you sell a put option, you expect the market to go up. So when we had a 2% dip on 10th of August before the inflation data got released, so I sold 4,800 put option. So 4,800 put option I sold for 105 rupees or somewhere around 108 rupees, I'm not sure. So I'll just show the recorded video as well. So I sold 4,800 put option at 108 rupees. So what happens if I sell 4,800 put option at 108 rupees? If LTI expires above 4,800 for this August expiry, I'll back the entire 105 rupees. So 105 and the market lot of LTI is somewhere around 150 rupees. So I will back somewhere around 15,000 to 16,000 for this trade. So I was expecting the market to go up after this small dip. So along with selling of 4,800 put option, I bought 4,600 put option. So what I did was, here I sold 4,800 put option and I bought 4,600 put option, because you should never risk your capital on stock trades, because anytime a stock can fall 10%, unlike index, because index has the capability of moving 1 or 2% mostly, but stocks can fall 10% or move up 10%. So it's better to play with stocks with hedges. So what I did was, I sold 4,800 put option and 4,600 put option as well. So you will be seeing the recorded video right now. So as you can see here, I've sold 4,800 put option at 108.50 and 4,600 put option I bought for 45.50. So the total sell value is 16,200 and the total buy value is 6,800, and the net value you can see at the bottom is 9,400. So this is the total profit which we'll be getting. So why I bought 4,600 put option? So I bought 4,600 put option because, so in case if LTI comes back to its breakout zone, so of somewhere around 4,200, my loss will be arrested below 4,560 or something like that. So that is why I bought 4,600 put option in order to reduce the max loss. So in case if LTI comes down and crashes, so I'll be able to come out of this trade with minimal losses. So that is why I bought this 4,600 put option. So let's understand this trade by looking at the payoff right away. So these are the positions I had. So I sold 4,800 put option and bought 4,600 put option. So LTI the next day gapped up and it closed above 3%. So the 4,800 put option closed at 45 rupees and the 4,600 put option closed at 20 rupees, which is at a loss of 3,700 rupees. So how much I will be gaining in this trade totally? So let's analyze and find out. So actually the maximum potential in this trade is 9,450 rupees and the margin required for this trade is just 50,000. So for a margin requirement of 50,000, 9,500 is almost 20% returns, so which is really good. So on the max loss is 20,000 and the probability of profit is 80%, because LTI is bullish, so the probability of profit is really high. So the risk to reward ratio is 2:1. So the risk is 20,000 and the reward is 10,000. But the probability of profit is 80%, because since Nifty is bullish, obviously LTI has the potential to close on the upside. So I took this trade on 11th August and within the next 14 days or 10 trading sessions, I will be making 9,450 rupees, which is almost 17 or 18% returns for a capital deployed of 50,000, which is really great. So that is why I took this trade, and on top of that, I don't want to risk taking trades in stock options. So that is why I bought hedge as well. So in case if markets fall down, the loss will be arrested to 20,000. So this is the reason I took this trade. So next what I will be doing is, since 4,800 put option came to 45 rupees, so if it comes below 45 rupees, I will be rolling up to 4,900 put option and rolling 4,600 put option to 4,700 put option. So this is how I make some extra bucks. So just by rolling the sold put as well as the bought put. So if you do that, you will make some extra bucks as well. So that's the reason I took this trade. And since the loss is limited to 20,000, that is why I call this trade as an inbuilt stop loss trade. So the bought put option will minimize the losses that we'll be making. So it's better to play with hedges in stock options than going naked. So because stock options can be really painful at times, because I've experienced the same once IRCTC fell 10%. I faced a huge loss at that time. So after that huge fall in IRCTC where we had a lower circuit, I stopped playing with stock options without hedges. So whenever I trade in stock options, I play only with hedges. So it will act as an advantage for you. So hope you all find this video helpful. So this video is just for educational purposes only. So thank you so much for watching the video. Signing off until next time. Cheers.